Alright, let's take a look at a stock that had some real volume and change. That's CEI. And CEI, I look at the chart pattern and I have those support resistance line, and I look at the daily first, because where's the last time something happened? So we don't, let's assume that we don't have this candle because we're preparing for this. So we take the chart pattern of the last valuable zone around that price area, and we can see there's half a volume, 3 million, to this. That was in 24th of January, and then the most valuable line is the close line, so we don't need all the other ones. So most valuable for you is the one with the highest volume in that zone. So here's the closing. So that is what you would have put up. Maybe also the line here, because that is also a valuable line. But if it comes down to the most important lines, it's probably the one with the highest volume. Alright, let's assume we only have that line. Let's go into the 5-minute chart and let's see what the chart pattern looks like. So here we go. This is the pre-session price range and price action, and if you look closely from the action within that one day where something happened. So it started up here, and then that is the high of the open 258 and high of 258. Maybe that is some value. Let's see. In the pre-session we had a high of 280. Let's see if that is any value for us. As you can see, the high in the pre-session is something like a resistance. So next time we trade this, we could possibly look for an entry around here, but then you would have a very large candle going down, up and down, over, let's say, over 15 cents. That's maybe too much. So as soon as the third candle after the resistance is broken down, the 240 resistance, let's take a look back. What was the 240 resistance in the prior date, 24th January? So that was the open of the day. So that's our resistance right here. And then we had and it has the highest volume, as you can see. The first 5 minutes has the highest volume. Probably a lot of retail traders, because you don't see a lot of volume in the day. Not sure, but I assume. And then, yeah, which one is it? Which one is it? Well, let's figure out maybe round numbers. I would definitely go for the open. You don't know. Yeah, the open is the lower line. So we delete the upper line. Take a look at the lower line. And say this is our 5-minute chart. I would probably try to take a move where there's resistance against the VWAP. As you can see here, the VWAP is supporting it, and boom, it breaks through the 240, which was the open of the last time, up to the high of the last time, 280. The less emotional burden you would have had around here. So you don't go crazy, probably here. It takes 10 minutes and you make 13%. That's a lot, right? So let's see if how that would have looked in the 1-minute chart. Say we are around here. Goes down up, move leg, bumps down against the VWAP, bounces back, a lot of bounce. And yeah, let's say here is quite a volume, then they sell off, but then here's a big move. That's what, 90 minutes into the open of the stock market, around here, 250. So whole and half whole levels, right? Those are the magic numbers. So probably around here you could have taken it. This is a strong candle, but then when it gapped up right here, and it showed force, you could have entered here on 260 for the high of 14%, then goes lower again. So you would have lost maybe 2% on that. So either a trading stop loss or a stop loss, or you sell off right here. But I would have taken the trade around here, tried to take the trade and maybe get a stop loss of, how much is that, 3-4 cents on the 1 minute chart. On the 5 minute chart, which just makes much more sense, let's see how that would have been. Yeah, so right here you enter the trade and you have here an exit, maybe off the low of the bar before, so that would have been almost 10 cents, which is quite a lot, but maybe just below the low of the previous candle. So, and then you take the whole 3 candles that you just seen until it tops, and then it's trying to break the 280s, which was our prior resistance. Can't break it, can't close behind it. Boom, only here it's trying to close it, can't. Then it opens on the high of that candle, tries to break through it again, can't, gets rejected, gets sold off, closes below, over 7 cents in that one candle. So actually I would have taken the trade around down here when the VWAP acts as a resistance, and if I had the nerve and the guts, I would have held it for the 15 minutes until the first red candle or the first resistance, as we can see from that line that we showed, that we've seen from the prior candle on the 24th of January, gets rejected, and then around here, of course, that's just a perfect exit, 20%. That's great. So I put that down in my Excel, and next time I have an idea. I put down the time too, and then its resistance on VWAP, and I would say it's a breakout. Yeah, it's a breakout because that's the high of the day. Breaks through, breaks out to the upside, gets rejected. You could try to take short here, but I'm not sure if that stock's shortable. Yeah, but on the long side, could be a beautiful trade. All right, that's it.